Welcome to my channel. Today I would like to share with you guys how I flipped my small account from $300 to $866 with a 188% gain. My main goal is to gradually keep flipping accounts on a weekly basis. So let's hop into my MT5. I would like to share with you guys my metrics and my trades, and I'll be breaking those down in the charts as well. You can see it's a real account. There's no demo account, no faking, just transparency here. And it's a small cap. Let me make sure that it's from Monday till today. And my balance is currently at $866. It was at $966, but I made a withdrawal, as you can see here in the bottom, of $100. Actually, the gain would have been 200% for the week. But yeah, these are the trades. I'll be breaking these down in the charts as well. There are losses as well. All right, so let's go into the metrics. So you can see here, I started on Monday with $311 and gradually grew it all the way till Friday, $866. I've traded mainly gold. I've had a few small Nas100 trades and GU trades, but I mainly trade gold. Okay, so looking at the 1 hour chart, we can see that we broke a bunch of structure here, and even here. So we were downtrending, right? So if we look at this without this push up, if we look at this, we would want to try to continue going to the downside, right? A little bit about my strategy. I trade the Malaysian support and resistance engulfing strategy, and I mix that with the stochastics indicator and with the Fibonacci tool. I will show you guys here in the charts in a minute. But first, I'm gonna mark my 1 hour engulfed candles. All right, I like to look at these engulfing patterns here. This is all last week. I don't even need to mark these up, but just to explain to you guys how this strategy is actually working, all right? So we see these boxes here. We see this bullish candle was engulfed to the downside. By the way, the engulfing strategy is similar to supply and demand. So we have this bullish candle engulfed to the downside, price came back, reacted, and then there was a short setup here. It did the same thing, engulfed this candle, came back, reacted. And the same thing happened here, engulfed to the downside, came back, reacted to go lower. All right, this is the order flow. This is what I mainly start looking at first with the trend, and then I'll be going to the 15 minutes. And here I would like to see where I could get a potential short setup. First of all, I would need to know if this is a good retracement level to go short, first of all. And the way I mark my Fibonacci levels are stochastic overbought and oversold zones. From here to here, and everything above 50% of that range here, everything that happens in here, I'll be looking for a sell setup to go further down. Yes, we see it going up, but let's say we're on a Monday here and we haven't seen price going up yet, so we are anticipating to continue going short, right? Plus, we are inside this 1 hour engulfed level here. I like to look for 2 breakouts on the lower time frames and 1 breakout on then the higher time frame. So we have a 15-minute breakout here, and this one was engulfed. I'll mark this as the 15-minute engulfing candle, and price came back and reacted from here. And we were all the way up here, so it just makes sense to short instead of going higher. We're already way up here, so we need some kind of push to the opposite side at some point, at some time, right? But I'm aligning that with overall market structure here, bearish, and I would anticipate that we're still bearish, but I'm just taking 2 to 3 hour trades, guys. I'm not gonna go all the way to this low right here. I'm going mechanical. And I remember I was taking a short in the lower time frames in the 5 minute after I saw this 15-minute low here taken. Let's go on the 5 minute. There's a bullish candle that was engulfed to the downside here. This is the 15-minute candle. This is the 5-minute candle. It broke this 15-minute low here, and it broke 2 5-minute levels. I like to look for 2 breakouts, or at least 1 breakout in a zone like this where my displacement has already happened. All right, so I saw this happening, and as soon as it pulled back up, I was going short around here, stop loss above here, and when it broke this low, I minimized my losses and I let it run all the way, I remember, until this right here, all the way to here. So yeah, this was actually a 2.5 hour trade that I took. After this win, I stopped trading and I went my way, and I have not been taking this trade. But let's say you would have wanted to take this trade. In this situation, you can see I would be using the Fibonacci tool, and I would be looking for any types of bearish moves here. So I would have hopped in right around here, stop loss above, and I would aim for first this low and then a 2R right here. We could have went 3R, honestly, but I'll be taking at least partials at 2R or at this low, or at this low around here, right? Let's say if you're greedy, you would have taken both trades, right? But yeah, I just like to have 1 good trade a day, or 1 good trade per session, and then I would like to just go my way. All right, let's move on to the next day. All right, what do we have here? We have quite some choppiness going on here. I saw price struggling to react and go lower here. So we couldn't really see any bullish candle being engulfed to the downside. So what do? We use the 15-minute and look at structure and see what happened. This is a Tuesday. All right, so we have this 15-minute level that was respected during the whole London session. And we have this. So what do I look for here? First of all, I wait until it's at least 8 a.m. Eastern time. And then I look at what happened and I look at market structure. So I saw London was just respecting this support level here, and it was giving me consecutive breakouts to the upside on the 15-minute, giving me a structure to the upside. So when I saw that push to the upside after 8 a.m. Eastern time happen, I would be looking to see what happens on the low of that structure here, which is this one. This is the lowest candle of that breakout that was engulfed to the upside, and then it came back into the level, and then it came back into the zone, and then I would be looking to see what happens right there. First the Fibonacci, and I would like to know what happens below this area, what happens here. All right, we need to have some kind of lower time frame structure before we hop into this trade as well. All right, what happened in the 5-minute here? I need to have some type of breakout before I go in. I remember taking this trade by looking for some kind of breakout. So was there a breakout here? Was there a breakout here? Where's the first breakout? Let's see. All right, push down, broke out to break this level here. This lowest low was taken out by this move here, and it also it also went above this one. So that's 1, 2 breakouts. That's enough signal for me to be going in. All right, let me get rid of this. I'll be getting a Fibonacci, making sure that I get an entry at least 50%, which is this blue line here. I'll be hopping in right here. And what I do, I just put in a low position, and if I know it goes a little lower, I'll add another one here, or I add 2 positions here, but just small added on positions. All right, this is my trade that I took, and yeah, I could have still gotten more here after it came to this level. There would have been another chance to get in, but first you need to have this bearish candle here engulfed, and then you just enter at a pullback into this zone right here. Your stop loss right below this one. You would aim for another 2R, but like I said, I like to take 2Rs or 3Rs and go by my day. Let's go to the next day. I remember this one very well. So let's look at the 1 hour. Was there anything hinting for a downtrend? Okay, so let's see. High to this low. All right. Just to be in an alignment, we are over the 50%. We have the potential to go and continue lower. And we also have a reaction from this one right here. But what am I looking for in this area, in this zone? Everything above 50, right? What am I looking for in this zone? I'm looking for some kind of market structure shift. I'm looking for some kind of market structure shift. I see this low has been taken out, and then I see this low has been taken out. That's 2 breakouts on the 1 hour time frame. Why would I not be looking for shorts now? And the Fibonacci aligns with the level, and there's a reaction from this zone right here. Why would I not want to look for any kind of shorts? So let's look at the 15-minute to get that lower time frame structure. All right, we have that. So we have this big old candle, and we have this one that was engulfed as well to the downside, and we see it's been even struggling to go higher. When is this zone invalid here for a short? It is when the 5-minute time frame closes with the body above this zone, and this one was engulfed as well. Now, if there's another engulfing candle to the downside happening and it comes back here, same rule applies. If the body doesn't close above this zone, there's still a validity to short. All right, so let's look into the lower time frames, the 5-minute, see what we could have gotten. All right, we had our market structure shift to the downside. We had an engulfing in the 15-minute here, and price came back into the zone. And then we have a push to the downside. And after 8 a.m. Eastern time, it came back into the zone. And then what happened? It gave me an engulfing. I can tell you right away, this is a loss. And that's okay. And then when I saw this, another 5-minute being engulfed, and when I saw that there was no body closing above this zone, and it pushed down pretty far with the bodies pretty low, I was waiting for a retracement of 50% to hop into the trade right here. I think it was right here exactly. Stop loss above here. And my target was where it would potentially bounce from. This was my target right here. Right here. It could potentially bounce from here and then continue higher, but it didn't. It continued the order flow of the higher time frame. All right, so this would have been a 3.7R to be exact, 3.75R minus 1R because we had one loss here, so it would be 2.75R. All right, let's go to the next day. All right, we know where the 1 hour is, but let's look at the 15-minute engulfed zones. We would have one here. We would have another one here. And we were already in this one. All right. I remember having a small loss going long. I expected price to go here and then drop down, but it didn't. That's okay. I realized that quick, and then I went for shorts. We broke some higher time frame lows here. Why would we not go short? And we broke another low here during the Asian session. I remember trading London. That day I was available to trade London. So let's look at what goes on here. Oh, another confluence, like I showed you guys before. I use the Fibonacci. I use overbought and oversold zones to mark my Fibonacci in a trending environment. Mark it up from here to here, and I'll be looking at what's going on, anything that goes on above here in the lower time frames now. All right. So when I saw this breakout to the upside, first of all, I saw this breakout, then I saw this breakout, and I saw the body close above this candle. And then I was thinking, okay, let me get the Fib tool, let me look for longs. And I tried to go, usually, you know, it would retrace and then it would react and push up aggressively, but no, it didn't want to do that. And I realized around here, after this bearish 5-minute candle, I took a very small loss and got out right here at the bottom instead of my stop loss, because I saw that we are still inside this 15-minute engulfed zone and we have not closed the body yet above this zone. So this short is still valid. Why would I be looking for any longs? If the body closed above this level, then I would try to look for longs. So being flexible is so important. All right. So then I immediately took a short when I saw this one engulfed to this bullish candle engulfed to the downside. I took a short right here. I had my stop loss initially here, and then I moved it to around here above the bullish candle that was engulfed to the downside. And my target was, actually I had 2 positions in. So because I had 2 positions in, my target was here, but my target could have easily been just right here. But I took everything from here because I remember I added several positions. I had one small position right up here with the stop loss above this candle, and then I added another one here. So yeah, I had two positions in there. All right, that was London. And let's go to the 15-minute to mark out what happened with New York. All right, so what we saw here is it's 8 a.m. Eastern Time, New York. We have this level, it broke structure. So because it broke structure to the downside, I was just anticipating continuations of shorts, and my target was here. And I thought, okay, the next pullback after this low, it's gonna pull back into this zone. Oops. Because this bullish candle was engulfed to the downside on the 15-minute, right? And then I was looking forward to just short there. Hold on. And I actually did short. Put out the Fibonacci. It has to be at least 50%. I took a short here, stop loss above, my target was here, and price came up to, price went really close to my target, and then price eventually went up to stop me out. So yeah, that one was a loss. Now let's look at the last day. When I saw a structure break to this 1 hour structure break right here, and then a second one right here, I was just looking for longs, as I understood, okay, Fridays, sometimes when it really trends, it trends without any proper good retracement sometimes, right? So retracements don't always happen. A lot of times Fridays is either very choppy or it really is very volatile and one directional. I didn't see any reversal on the higher time frame for the downside, and I don't see any structure break on the 15-minute here. So I saw that I just need to keep going for longs then, especially after I saw this structure break here. You know, it's past 8 a.m. It came to this one, touched it, engulfed this bearish candle here, touched it, and this is where I took a trade right here, and I was going in aggressively and with the 1 minute as well. So what I did here is I put out the Fibonacci tool, of course. I was patiently waiting for price to really touch this level, but I remember going to the 1 minute. I took one trade exactly here. Okay, yeah, right here with the stop loss here. This is one. And then when I saw on the 1 minute it broke this structure here, I added another one at this one that was engulfed right here with the stop loss below this one. Now this is a risky one. My main trade is this one, all the way with the stop loss down here. My scalp little extra money entries or compounding entries with the reactions that's going to the upside. I'll be adding another one here. This is how I usually compound and stack my positions. And then I saw another structure break here, right? So 1, 2 structure breaks to the upside. I took the Fibonacci again. I think overall I had like 4 positions, and then I added another one right here at the 50%, stop loss below, and then I added another one somewhere around here. So I had 4 positions. I shared this trade on my Instagram, and you can check out all the trades that I've been sharing there as well. All right, that is it, guys. I hope you liked and enjoyed this video. I hope you got some value from this video. So please subscribe, like, and let me know if you like this type of content. I'll be seeing you soon. Peace out.